Hi, what's up everyone, and welcome back to another video here on our YouTube channel. For this week's episode, we're going to take another look at entry confirmations, kind of a bit of a part 2 to the video that was already posted. And alongside that, we're also going to be taking a look at reviewing the trades that were posted here in the Discord for this week. Some pretty crazy outcomes and some nice examples of using entry confirmations for those as well. So quite a bit to get through. Please stay tuned, and I hope you enjoy the video. Alright, so before jumping into the actual trades themselves, I think that it's very important that we review some basic theory in regards to entry confirmations. And when you do now take your entries, there are actually a lot of factors that you do have to consider. First of all, there's the first portion, which is associated with actually finding the point where you want to enter, and that is just revolves around your theory. So whether you're trading supply and demand, support and resistance, some patterns, whatever. That's the first step, that you want to find your actual entry point. And when I'm trading supply and demand, I have various things that I look for, and that's how I identify these order blocks right here that I have drawn here or here. And you can see like here, just like how I drew them here at the beginning of the week. And I have various things that I look to identify those, and those revolve around seeing strong volume, strong leg outs, quite a number of other factors that are just revolved around basically making sure that the block that I'm dealing with is a high pressure volume zone that is likely to have a lot of activity when we reach those. And I mean, that's supply and demand theory on its own. I mean, that's essentially what I teach, so there's a lot to identifying these blocks. But then the second part basically just revolves around market structure for your essential market execution. Once you now have those all other factors in play. And market structure really is this simple. This was the video that I posted not too long ago, June. I just talked about simple uptrends, downtrends, and I didn't mention sideways structure, but that is all market structure really is. You have an uptrend that is higher highs and higher lows, downtrend lower highs and lower lows, whereas sideways is just equal highs and equal lows. And this is literally what defines an uptrend, which is bullish structure, downtrend which is bearish, or sideways which is neutral. And once you are at those regions where you now want to take your entry, all you want to see is a shift to one of these. It should be very clear. Like if the shift is not clear, then it hasn't happened yet. A 5-year-old will be able to tell you if the market is turning at a specific point. It can start to turn and then turn back down. But I mean, that's just risk and reward when you're trading. It's a game of numbers, and you got to keep that in mind. Nothing will ever be perfect. But this is literally everything that it comes down to, just identifying these shifts once you now are at the regions where you want to see your shift. And I mean, there is a very important additional part to this that I just quickly want to talk about. I mean, one of the bigger figures that I sort of believe in when I trade is Richard Wyckoff. If you've actually read my ebook, I talk a lot about him and sort of how I apply his ideas to my trading. But one of the big things he believes in is that the market never moves the same. And that is why you're never exactly going to have a set in stone solid rule for your entries that are going to guarantee a certain outcome. There's always going to be your certain factors that you look for, but from there on you can't be too super like serious about like pinpoint pip entry. Like it doesn't work like that. You have to be a little bit more open and just see the general picture, because yeah, simpler the better. You can definitely believe me when I say that. But going back to these trades, that's exactly what we had, and I'm just gonna go over how I took them basically, not in as much detail as in this video. So of course, if you're in this group, make sure to check out this video. It's well over like 12 minutes just talking about how I entered my trades and so forth, and yeah, it's part of what I teach, so obviously there's a lot more detail there. But we identified these blocks. Yeah, when the week started off, let me just see if I can draw some line here. I think that's where we started somewhere, right? We were actually down there. Okay, yeah, so something like this. Yeah, we identified our blocks. So then naturally we come into our demand region here, and all we want to see is a shift to a bullish market structure to actually take our trade. And if you're actually more well versed in the theory that I teach, you will know that a big portion revolves around what you call accumulation and distribution phases, which you can get at these demand and supply zones. And if we actually see that here, we can see that we had a perfect typical Wyckoff accumulation going on. So We came down, formed some lows here, kind of support going on right there. Then we came in for a spring, stopped out a lot of retailers in typical stop hunt fashion, then come back right up to the upside again. And obviously we had a lot of other factors going on here, such as nice volume spikes and so forth, which only added to my confirmation. And that is when I entered my first trade somewhere around here. Screenshot right there as always. But that is the type of sniper entry you will get when you learn your pair properly. I mean, there's absolutely nothing wrong with, say, waiting for a stronger shift, say like this. So here we had this candle here that closed above these highs, right? So now you're even more confident in this shift, and there's nothing wrong with like taking your entry here, having a much wider stop loss than, for example, if you had like entered down there like I did. But you can still get a clean 1 to 3. I mean, in this case, it's a pretty bad example because price actually ended up coming down here, as we can see. But there are many good examples as well when you're trading these strong zones where price just drops immediately. So a trade like this wouldn't be too bad. And I mean, if we just take a look at the second block that we came up to here, we got the exact same thing going up into the 5 minute here. We know we come in here, we want to look for sells. And I mean, according to the factors that I look at, this still quantifies as a fake out and not an actual swap zone. So I was still looking for sells here, not buys. Once again, there's a lot more in this video on that specifically. But you start seeing these sort of small candles, rejections to the upside, then you get a nice bearish engulfing, which captures what, 1, 2, 3, 4, 5, 6, 7, almost 8 candles like that, just that. So yeah, there you could have entered there. Pretty sniper entry there. Pretty large downside target, obviously. It's what you get when you trade supply and demand. But obviously you got this even stronger candle then after that. But you could have entered here as well. Nothing wrong with that. Now you've seen an even stronger break of structure, and obviously your RR is significantly affected. And I talk about this as well. You could make the argument that you're coming to demand block here, but once again, it doesn't quantify as a fake out according to my rules. So this was not something that was bothering me. And then later, I mean, we just came down, kept smacking into here. I mean, no orders left as expected, obviously, and then eventually just kept breaking down. Nothing unusual there, just simple economics, really. But yeah, that's it. Like, that's it, really. Like, it's important to us. You don't have to enter here. You can enter here, and it's also important that you don't enter too early. Like, you want to enter once the shift has already happened. So you don't want to be selling like here. You want to sell here. Like, I know a lot of people who see price coming up and, oh, I don't want to miss it. Like, oh, I start selling here, boom, get stopped out there, lose like $2,000, and then like boom, you know, like don't be that guy. Like, please wait for your entry confirmations. It really just takes patience, and if you miss the trade, well, it's better to miss the trade than lose X. Like, it's kind of easy to see that. And I mean, here on GU we had like the exact same thing. See here, zone drawn up just like that, typical drop base drop situation going on there. Nice round institutional number 1.395. Price took its time, kind of going below here for quite some time, but then if we go down to like the 15 minute, we got a very clear shift. So we saw price come up all the way to like our perfect baseline, which essentially was the middle and this round number. So really clean in that case. And it's also important to remember that coming into here, it is our first fresh touch, so we do expect a strong reaction. And I mean, just coming up here, seeing these rejections to the upside, closing there, forming another bearish candle there with essentially more than half the candle being an actual wick to the upside, showing the strong seller pressure and weak buyer force. And then, yeah, you can just enter there, put your stop loss nicely above structure or the demand block, and then boom. Drop just happens, and then you just wait. I mean, supply and demand, it's how it is, and you really don't have to complicate your entries any more than that. Like, if you're waiting for entry confirmations to the point where you feel like not confident taking one after it's moved like 5 pips from your optimal, then you're trading way too much, because that shouldn't matter that much. Like, you want to have your stop loss like a good 20 pips, 25 pips, I would say, at least, if you're trading like a 1 hour block in this case. You could obviously get some sniper ones down at like 1 5 minute with like 5 to 10 pips or whatever, but that comes with time and just experience. But if you're missing out on every trade because you're trying to do that, just try to take a little bit more of a relaxed approach. Just reduce your lot size a little bit, widen your stop, and just as time goes, you will just become more and more adapt to it. But yeah, I mean, that's everything really. I mean, I obviously can't give up everything that I use in regards to my entries because it's obviously part of what I teach. But there's a big portion of that in here, the exact things that I looked for, outgoing volume and strong momentum in general. And but other than that, it's that simple, really. Like I said, like you see coming in here, you want to start seeing a bearish shift. A 5-year-old could tell you at this point, if they wanted to start seeing a shift here, that by this point the shift has started happening, so you could enter here. It's not harder than that. If you start thinking like, oh, I'm coming into some kind of support or whatever, then you're not even following your supply and demand plan, because we're not trading support and resistance. So coming into some form of structure here, it shouldn't matter. But if it does, it means that you have a lot of refining to do in regards to your practice and confidence. But yeah, that's all really. We'll be updating the Discord just in time for start of trading week on Monday. And obviously any questions, feel free to ask me. I'll be available to answer them. But yeah, until next time, I wish all of you the best of luck with your practice and your trading, and have a wonderful day.